Ever wondered if your business is actually making money? Or where all that hard-earned cash is going? Well, the income statement has all those answers and more. Stick around, and in just a few minutes, you'll be reading this financial powerhouse like a pro. First things first, what exactly is an income statement? It's also known as a profit and loss statement, and it's basically a financial snapshot of your business over a specific time period. Think of it as the story of your money, where it came from, where it went, and what was left at the end of the day. Let's break it down into bite-sized pieces. Revenue. This is all the money flowing into your business. It's the big number at the top. That's why it's often called the top line. It's a simple formula. How many units are sold and at what price? Cost of goods sold. These are the direct expenses tied to producing the goods or services you offer. For a coffee shop, this includes everything that goes into making each cup of coffee, like the coffee beans, milk, sugar, cups, and even the energy used to brew the coffee. It's basically the cost of the raw materials and supplies that are directly involved in creating the product your customers buy. Gross profit. This is what's left when you subtract the cost of goods sold from revenue. It's your first clue about how profitable your core business really is. Operating expenses. These are your day-to-day costs of keeping the lights on. Think rent, salaries, and that fancy espresso machine lease. Operating income. Also known as earnings before interest and taxes, operating income is a financial metric that reflects the profitability of a company's core business activities, excluding any effects from financing or tax expenses. This figure highlights how much the company earns from its primary operations. By focusing only on the earnings from core business operations, operating income provides a clearer view of the company's operational efficiency, independent of external financial factors like interest costs or taxes. Net income, profit after tax. Net income is the bottom line. It shows what a business actually keeps after all expenses. This includes costs like operating expenses, interest, taxes, and any other deductions. Essentially, it's the true profit left after everything's been paid. Let's look at an example. Imagine you own a small bakery. Your revenue from selling baked goods is $100,000. Your cost of goods sold total $40,000. That leaves you with a gross profit of $60,000. Your operating expenses, rent, utilities, and staff wages, come to $45,000. Subtracting this from your gross profit gives you an operating income of $15,000. After paying $2,000 in interest on a business loan and $3,000 in taxes, your net income is $10,000. This is your profit for the period. To make the most of your income statement, 1. Compare it to previous periods to spot trends. 2. Look at each expense as a percentage of revenue. Are any unusually high? 3. Use it to set goals. Can you increase revenue or decrease expenses? Thank you for watching.